All right, what is up, everyone? Welcome back to another market recap. It's a little late, but right now I'm just trying to get consistency over perfection. And honestly, these are probably going to start coming out around this time because I literally don't have enough time in the day. But you know what? I'm doing my best, and I figure market recap is better than no market recap. So hopefully, you guys enjoy this video. But today, before we get into it, I want to talk about how there's a shift in your brain that needs to happen when you're taking an inversion or when you're taking a change state delivery. You can't just take any setup. The market needs to be ready to run liquidity. And this is something that in recent weeks and days and months I'm really starting to learn. The inversion is not the trade. The change state delivery is not the trade. The trade is the liquidity, right? Identify the liquidity and then wait for an inversion, not just any inversion, but one where it's undeniably obvious that we are going to go run that liquidity. Where it's undeniably obvious that we are going to go run whatever liquidity. Sorry guys, I got distracted. What is going on with the camera? I think it was flashing blue. Anyway, I'm just gonna try and ignore that. We're gonna cover some trades today. That was the rant for today. Super short, but to start things off, guys, Jan and I took the exact same trade, and if that doesn't show how powerful trading can be, like that, like it's just crazy. Like we literally took the exact same trade because we both understood exactly what was happening. So I'll walk you guys through that right now. So I posted in my journal that I took this where we had this really nice liquidity pool here. This is a really obvious accumulation range. I mean, very tightly bound here. We come down into a 15-minute fair value gap. We get SMT. We get we get SMT, and then we get a 1-minute change state delivery, and there we go. Light bulb's going off. Now, you could always make the case. Maybe it could be more obvious. We could go run liquidity, but still, most of the time with this, you will go up to this accumulation range. So I was pretty conservative. I was just targeting like 1.3 to 1, and it did hit, so that was nice. And you can see here, Jan took the exact same trade where we retest this change state delivery. Now I entered on the close, he entered on the retest, and both are fine here. Retest, maybe you get a little bit better RR, but for me, I figured the close is close enough. I mean, it's not that far different, and a lot of time with when I enter on the close, I'm kind of anticipating the momentum to stay, so I put the stop loss just a teeny bit higher a lot of time. But when you go into the market in the morning, you gotta think about the market in terms of where's the accumulation, where's the low resistance liquidity, and then wait for an inversion or change state delivery where the market's undeniably obviously going to run that liquidity, right? You can't just take anything. You can't just, like, if it's an inversion and it doesn't make sense with liquidity, it's not a good trade. And this is something that just, it comes with time and it's really hard, but this is like probably the biggest thing that I've been learning lately. It's not easy, but that's the secret, right? So the first step in the morning was you need to figure out, I mean, it's pretty obvious, but like you need to figure out that this accumulation range would likely be traded back to. And this was also pretty trend liney. You can see here how we're basically forming lower highs all throughout here. So this is a giant trend line. So with that in mind, when we dump at market open, you're kind of anticipating this to be manipulation, because one, right after market open, that's typically when the manipulation happens anyways. But two, just based off of liquidity, we have this really, really nice generated liquidity here. I gotta charge my laptop. Where's my charger? Sorry, guys. Normally this doesn't happen. So yeah, you have to think about the market in terms of liquidity before you even think about your trade. And here we had this really, really nice trend line accumulation. So we know the market's probably going to come back here at some point. So at this point, you're just waiting for the market to show its hand. Once again, 15-minute fair value gap was right here. 1-minute change of state delivery. And the cool thing about this trade is we actually go all the way up. So this is the power of flow state right here. We actually go all the way up to the fourth standard deviation, which is the fourth standard deviation is typically seen as your max extension, which was aligned with previous day's high. So the draw on liquidity was previous day's high. And guys, anytime you see a really good draw on liquidity and an accumulation range here, and it just fits like a puzzle, like this is going to be rocket fuel to expand us to our draw on liquidity. The people in this range are going to get manipulated out and then buy back at the previous day's high. Conceptually, you guys understand this. Everyone in here is consolidated, like they're just chilling, manipulated out, buy back in. It's all conceptual. Conceptualize what is going on, right? So the fact that we had this giant consolidation, this is going to be rocket fuel to be able to distribute us to previous day's high, aligned with the fourth standard deviation here. And then let's say you didn't want to take a flow state, because I'm not even really a flow state trader. I'm an inverse fair value gap trader. Well, there's actually a good trade you could have taken. It's kind of a little scary for me because you can't really go break even. So I'm going to show you what I mean. This was the trade, and it's the same exact idea. It's really obvious that we're going to expand higher, but the issue is you can go break even here, but then you instantly get stopped to break even. So in order for you to actually be in profit on this trade, you'd essentially have to have conviction that 10 a.m. is going to expand us to previous day's high. And if you don't have conviction in that, then this whole idea doesn't really work. But, that's just a personal preference type of trade. And if I go to Dodgy server, you can see that Dodgy actually took this. Is actually incredibly close to his stop loss. Oh, that's the wrong direction. Let's see. What the heck? Okay, just believe me, Dodgy took this one. And so anyway, yeah, this is the type of trade Dodgy would take, but you would, once again, you'd have to have conviction that 10 a.m., because if you guys don't know, 10 a.m. is when you typically will get expansion in whatever direction. So if we have really obvious accumulation and manipulation this way, 10 a.m. is probably most likely going to expand us the opposite direction. And you can see that's exactly what happens here, and we go right up to previous day's high. So let's look at a couple other trades. I'm not even going to lie, I wasn't super stoked about much else. But I wanted to acknowledge this, right? Because this is maybe one of the cleanest 2022 models I've ever seen. This is really nice. This is the model that TGR trades. You get a sweep, break of structure, and then here's your 2022 fair value gap right at equilibrium, right? You guys probably know this from TGR. But you can see how precise this can be, the 2022 model. I mean, this is why so many people like it, is because when you do have it be obvious like this, it's going to be very, very precise. I don't trade it like at all, but I just thought I'd mention it because I thought it was cool. But if you don't know, it's basically just liquidity sweep, break of structure, so close above an old wick and return to for value gap at equilibrium or in discount. But it needs to make, once again, it needs to make sense given the context of liquidity. And if it doesn't, if you don't have this trendline liquidity, then you might as well just be like throwing darts blindly, because the whole point of any trade is liquidity. You have to conceptualize it before you take it. And then I also wanted to talk about this. So with this inversion, I'm noticing a lot of the time. Well, I'm not noticing. Like, this is just a thing that you can do. Like, this is like, if you take an inversion, this inversion is still valid all through here. So if, let's say, you didn't love this, but then you waited, and this inversion, you know it's still valid. It hasn't changed. The trade is still the same. So you can enter here with like twice as good RR, right? And we call this the Jan entry. Jan kind of made it up, and I kind of like adopted it. So thought that was kind of cool. We go right up to previous day's high. But yeah, I think that about covers it. This just happened in Asia, guys. This was so cool. Like, when you see this, we pop below an old low, inverse, and we just have such good highs that are just super, super generated up here. You know we're going to go run those. Like, and plus you can just go break even right away. So, this is a really relatively risk-free trade. And if you were on the charts at this time and you saw it, like, dude, take that. Take that. This is going to be worth your break. It's most worst case scenario. This is certainly going to be a break even, but I mean, most of the time you're always going to go run to this giant little blob here, and yeah, boom, right up to TP. I think that about covers it. You could have taken this as a 30-second inversion, but you know, there's some trades where it's like, this for me isn't really my style. I try not to take trades where it's to me it's not as maybe obvious we're gonna run liquidity, especially because this is like an external gap. But then again, I took this as a change state delivery, so you could just say, well, you're kind of being a hypocrite. But whatever. That about covers it for the video. Hope you guys enjoyed, and I'll try and keep these consistent. So yeah, talk to you guys later. Bye.